At the end of this video, you should be able to identify A. The trend of the market, B. A change in trend of the market, and C. When and where to enter the market. Let's start from the basics by understanding some terms used in this video. BOS stands for break of structure. This is when price surpasses its previous high in an uptrend or surpasses its previous low in a downtrend. Don't worry, you'll understand as we progress in this video. CHOCH stands for change of character. This is when price breaks a previous low after break of structure in an uptrend, or price breaks the previous high after break of structure in a downtrend. Order block is the area of interest that price is likely to continue the trend. It is usually identified as the nearest opposing candle before a big move. This is where an entry into the market is made. Discount zone is similar to order block. However, an order block usually exists in a discount zone. A discount zone is the area in between a break of structure and change of character. An uptrend consists of higher highs and higher lows. The higher highs and higher lows are replaced with break of structure and change of character for clearer analyses. The same goes for a downtrend by replacing lower lows with break of structure and lower highs with change of character. Now, this is how you identify the market trend. Let's say the market is here right now. We have a high and a low. We wait for the market to break and close outside one of them. Remember, I said close. If the candlestick doesn't close outside the line, but only a wick exceeds our marked area, it's not valid. Now, since price broke out of this direction, this will be our break of structure and this will be our change of character. Assuming price broke out of the opposite direction, this will be our break of structure and change of character. Can you clearly see two trends now? An uptrend and a downtrend. If you remember correctly, discount zone is the area between a break of structure and a change of character. Therefore, here are the discount zones in this example. Now let's identify the order block. As stated earlier, an order block is identified as the last opposite candle before a big move or before a break of structure. These are our order blocks in this scenario. However, there are cases where order blocks may not be the opposite candle. I will cover that later in subsequent various. I don't want to give you a headache now. Just make sure to click the subscribe button and turn on notifications to get updated whenever I post a new video. Now, we wait for price to come into the discount zone and lastly, to our order block. After price gets here, you don't enter the market straight away. There has to be a confirmation from the candlestick pattern in order to execute the trade. An example is the engulfing candle. After confirmation, you enter the trade and set your target profit and stop loss. One may ask, where do I place my target profit and stop loss? Don't worry, I will show you in my next video. You might be angry at me at this point, but trust me, that video is a whole topic on its own, so please exercise patience. Because of that, here's my bonus tip 1. Price doesn't always come down to your order block immediately after break of structure. But if it keeps trending without retracement, don't worry, this is where I introduce you to microtrends. A microtrend is a small trend within a main trend. In a case where a price trends for long, wait for the market to produce microtrends and trade it all the way down. As simple as that. Plot your points like a main trend and use the same knowledge you have on identifying market trends to execute microtrends. You've noticed there's a change of character here. Let me explain it to you using our previous scenario. Assuming price came back to the order block yet it didn't present any confirmation for entry and went all the way to break our change of character line, this is where we have change character. The trend is now a downtrend, so you adjust your markers accordingly. That's the same for our previous downtrend scenario. Change of character after breaking through, then you adjust your markers accordingly. Now you know how to identify market trend. When the market changes direction, discount zone, order block, when and where to enter the market. The following are scenarios on actual chart. We've met the market at this point. We plot our lines, the market breaks this point. We know that we're in an uptrend now. We then adjust our markers. We place our order block and expect price to come back. Price comes back. We're presented with a confirmation. We enter the market and set out stop loss and target profit. We identify our break of structure and change of character line. We draw our order block and wait for price to come back. Price comes back, but it fails to produce a confirmation and breaks the line. We have changed character at this moment. We're now in a downtrend, so we adjust our markers accordingly. Here are the bonus tips. If you have noticed, your mind reads the market well if I present to you using the lines rather than candlesticks. If you find a chart very confusing, use the path tool in the trading view to break down the market into simpler terms. I recommend you practice this on 4 hours and 1 hour time frame, as those time frames are very effective in identifying the market structure. The market structure is very much stable on the currency pairs rather than the commodities, so practice using the Forex pairs before advancing. Here's your assignment for the week. Open GBP USD chart in the 4 hours time frame and try to identify the current trend, its break of structure, change of character, and order block. Your appreciation fuels me. Don't forget to like, subscribe, and comment.